Welcome to Building the Future. I'm your host, Kevin Horick. The radio and TV version of the show air in over 12 states. This includes both coasts and Silicon Valley. The show also airs in the UK, Caribbean, and Australia. For full show times, plus past episodes of the TV and radio show, please visit buildingthefutureshow.com. We just launched a free online community to connect past guests, listeners, and others. This community will allow you to network, chat on Slack, or get help with anything else, and a lot more. If you're interested in joining the community, buying some merch, sponsoring the show, or signing up for the newsletter, please go to buildingthefutureshow.com. I want to invite all of you in the Building the Future community to join me at SUPEX, the Startup Expo in Fort Lauderdale, Florida, this July 26th, where I'll be the MC. SUPEX is one of the largest and best startup conferences in the US and the official gathering of the Building the Future community this summer. SUPEX has cutting-edge content, a cool startup competition, and a half-day forum this year called #WomenForWomen, the largest gathering in the US in 2018 of angel groups, seed funds, and VC funds focused on female founders and female entrepreneurs. For more information, visit www.sup-x.org. I hope to see all my Building the Future friends there. Welcome back to the show. Today we have Travis Dulaney. He's the CEO, co-founder at Push Payments. Travis, welcome back to the show.
Thank you, Kevin. Thank you for having me back.
Yeah, I'm excited to have you back. I think it's pretty timely with kind of all the stuff happening right now in the payment, especially digital payment space. But maybe before we kind of get into all that fun stuff, let's get to know you a little bit better and start off with where you grew up.
No, absolutely. So, unlike a lot of people in the financial services space, I actually grew up very simple. I grew up in Virginia.
Okay.
In the southwest area of Virginia. I'm just a good old country boy at heart.
Very cool. So you went to a few universities. Kind of what did you take in university and what got you passionate about taking that?
Well, I actually started at a little community college and spent some time at Virginia Tech, also spent some time at the University of Phoenix. And, but technology has always been my passion. It's never been anything other than the fascination of creating something. I've been a builder of things ever since I can remember.
Okay.
So growing up, simple and kind of as a country boy, if you will, we owned farms, and my grandfather had a farm, and we were building fences and barns, and so there's this aspect of construction and just building something that has always been ingrained in me. So the idea that I could take technology and software and build something out of nothing was fascinating to me, and so that's really what it amounted to.
Okay, very cool. So you mentioned you've been to kind of university a couple of times, but you've had a ton of kind of experience. Maybe walk us through your post kind of university career, maybe some career highlights up until kind of Push Payments.
Okay. No, I'd love to. I guess I really got into this business. I help people do a couple startup companies,
okay.
and then I got involved in really another startup. This was just after the kind of era of the roll up of the internet connection. I'm dating myself now.
No,
so the ISPs, they used to be mom and pop.
Yeah.
And then they started rolling up to bigger guys. Now it's AT&T, Comcast, whatever.
Sure.
But it wasn't always like that. So there was a lot of regionals, and we were an M&A company that bought them, and so I was part of their R&D team and created websites on these new things and these new little dial-up opportunities, and so we basically built the company, took it public, and sold it to AT&T.
Gotcha.
So that's what got me into the internet era, I actually had my own startup back in the day, and worked with AudioNet, which was Mark Cuban's old company when they started, right? We were doing video compression, stuff like that.
Wow, and, very early on.
I was very excited. But I had my own ISDN line, which we thought that was really cool before you get a T1. And
totally.
So it was, definitely dating myself a little bit, but that's just, I've always had a passion for that technology and the things you can do and finding what we could do and pushing the edges. And so then I went to work for a company that called Claim Card, and that was a startup company.
Okay.
And they had, after Hurricane Andrew hit South Florida,
Right.
there was, problems with paying out claims because there was a run on the bank, there's no money, and things of that nature. So Claim Card had put claim processing from State Farm on a card.
Okay.
So it was really the first prepaid card is what it was.
Interesting.
And so that company became Wildcard Systems, and Bank of America had invested in us, and we became a big component of gift cards when they first started. And so that evolved. I ran virtual travel money cards for Visa. We converted all the traveler checks to cards. So that's where I got my stint in the payments world, and that allowed me to learn issuing, understanding the networks, worked with Visa and MasterCard way back then. And one of my programs was the very first international remittance program using a card, first cross-border transaction ever did. And so it was fun. Learned a whole lot. And so that company, Wildcard Systems, got bought by a company called eFunds, which is a switching company. So then I started learning about switching traffic and how to route transactions from one place to the next and things of that nature. And then, eFunds 2 years later was purchased by FIS, and I was with FIS until about, 6 years ago or so now. And so with FIS, then I just continued to learn more. We got into our economic collapse a number of years ago, and I was right in the middle of that. So I spent a lot of time, unfortunately, shutting down banks. And so that helped me see all the insides of a bank and how they work, how the core works, all the different pieces connected to it, Fedwire, all those things. And coming out of that, I still worked for FIS. It was time for me to kind of leave the big corporate world. And, I ventured off and started looking for what I wanted to kind of do with the next chapter of my life, for the most part, and did a lot of consulting, did a lot of work in the card and around the payments world and mobile payments and things of that nature, and in effect started my own company that then became First Payments. And so we saw what was going on in mobile, the evolution of mobile and handheld devices, and so, you're going to have to connect that, and you're going to have the instant gratification and on demand, and things don't have to move faster because the products today don't.
Right.
So we had actually came up with a way, and we worked with Visa and mainly Visa in the beginning. And when they started, very first started out with OCT products.
Okay.
And it was a little problem with acceptance and all those things. So we've just been along that road all the time. And so then I've stayed there, and we've worked with the Federal Reserve on the Faster Payment Task Force and worked with the major networks and, to really improve the process of being able to digitally send a transaction instantaneously. And we use the networks that kind of run a transaction backwards.
Okay.
That's what it amounts to.
Interesting.
And so it gave us basically a new function, a new capability, and, really an opportunity for a new type of rail.
Okay.
And so that's kind of what brought us here.
Okay. So how do you guys kind of work with, some of these big institutions to actually make some of these payments kind of real time? Because it sounds probably really simple, but for somebody that's ever kind of tried to get into kind of some of these, banks or big systems, it's a huge challenge.
Yeah, it absolutely is. And so one of the big sticking points, really when it came down to working with banks, is that the banks are, or at least the perception that all banks are managed through the core. And so unless you have access to the core, you can't do anything. And that's what, companies like I used to work for, FIS and Fiserv and the rest of them, that's what they want you to think, for that matter.
Okay.
Because they had a monopoly on that business, and there was a very prominent person in the won't name his name, but it said if you own the core, you own the relationship, and you own that bank.
Okay.
And so there's a truth to that. There was a belief to that because technology hadn't evolved enough yet.
Right.
So, that was one of my big sticking points. How do we actually support, and how can we utilize and work with banks and still do this type of process without having that interconnectivity?
Right.
So it's literally one of those things out of a movie where I woke up at 2:00 in the morning in a cold sweat, and I ran to my whiteboard, and yes, I have a whiteboard in the house, a number of them.
That's awesome.
And I started drawing, and so of course, about 5:00 that morning when the lights came on, everybody was coming out for coffee. I was still working, and so I had figured it out. And so it's really, it's actually very simple to some extent, but there is no need to go to the core. And so it's really about the evolution of technology, use of APIs, and really just use of data in the right structures. The key thing to understand is that, and that actually I have to give little credit, and forgive me here, but Brett King actually allowed me to see this at one point in a different light. We were having a conversation, and he just did one of his funny eyebrow things and said, "Or is it?" and it just made me think differently a little bit.
That's awesome.
It was just it's just one of those things that like hits you at the right time, right? And
sure.
So, and really what it amounts to is that we have a huge distinction in the marketplace, that it's there and it's very obvious and everybody knows it, but you don't think about it. And
sure.
So if you think about today, and you said, well, how do you do that in a bank? And, for somebody who doesn't know, well, that is the point. Because today we have sold the public that everything happens just quickly.
Right.
Everybody expects it. Everybody demands that they have instant gratification. And if they don't, they get annoyed and irritated and go away. Right?
Yep.
So we've sold the expectation everything should work that way. We go from, email is too slow now, so we text. Or we IM or DM or whatever the case may be. And so we have all these avenues of communication. Too many really, but
yep.
but it sets an expectation that everything should be like that, right? And why can't I have it now? And it's almost like a child stomping their feet.
Yep.
So the banking industry and all of our rails is still living, in 20-year-old technology.
Sure.
So it just wasn't built that way. It's not that it couldn't. It's not that it's not digital technically, but it's not in a real-time fluent aspect of it, right? Meaning we have time in between because we have to do fraud and we have to do all these checks because it was convenient because that time was there. So it really have to reorganize how you think about things because, even like fraud, real-time payments, and a lot of people thought, oh, wait a minute, what about the fraud? Well, that's because they're used to doing it in between the wait period of ACH.
Sure.
Well, okay, so you designed it inefficiently, and so why is that our problem, right? But what it amounts to is the fraud and all the checks should be done up front anyway, which is why identity management is so important nowadays.
Sure.
You got to know who that person is on the other side because it's a computer. You don't always know that, right?
Sure.
So just creating that environment, and it's really the expectation that has been set, and we can then feed that expectation in a technology sense. So it's almost like a layered effect. So you can do whatever you need to do to manage and derive the frictionless environment to the customer. And from a technology and the evolution that we have today, we can create that environment that makes everybody happy. And behind the scenes, we can still do all the other things we need to do within the right timing, for depending on what you're doing. Fraud obviously does change things, but it also means that, does the money really move or does it not? So, you think of it this way. So today we talk about money moving, right? Mm-hmm. Or is it a number on the screen? If it's just a number on the screen, is there a whole bunch of Wells trucks or a bunch of, the armored trucks all of a sudden run off to the other bank and give them the cash? No.
Sure. Yeah.
Because, right, all of our money is digital nowadays.
Sure.
Except for cash, the paper.
Yep.
So the difference is they're just a bunch of different closed networks. Venmo, closed network.
Sure.
Zelle,
yep.
Closed network. Right? Visa, closed network. Try to get into that one without being on the outside. Right? Yep. So MasterCard, closed network. Every network out there, with the exception of like Bitcoin, is a closed network.
Sure.
So now Bitcoin comes along, and I will actually give Bitcoin and blockchain and that. And I got involved early on, so I confess, I own Bitcoin at $12, and
Nice.
and so so I got in for curiosity's sake, because
Sure.
I'm just a scholar like that.
Yeah.
And
Well, and
so,
you're in the space, right?
well, actually, somebody asked me about it. I'm like, I don't know, but I should know, shouldn't I? So
Sure.
so I think that guy that said that to me, because that's why I own
Sure.
$12 Bitcoin. But and then there's the hype last year around Bitcoin, and that's because that's nothing but mob mentality, and I can get rich quick scheme kind
Sure.
of stuff. And some will, and some will lose, and some will get scammed, and whatever.
Yep.
But it's supply and demand, like any other economic situation. You put a lot of money in, you can take a stock that really just stinks, and you go buy a bunch of it, and it'll go up. That's just the way it works.
Sure.
So, but anyway, when that started, what happened is it made people think differently. It made people go, wait a minute, maybe there is a different way.
Sure.
So if you notice, once that came on scene, the innovation just like caught on fire.
Yep.
So not only was it, people that never done payments or never done finances, all of a sudden now, opining on, we could do this, we could do this. And people, yeah, oh yeah. And, you get caught up in the hype. Of course, some of it is like, we could always do that. You just got to develop it. And, so you can look at, blockchain and that type of development also no different than, okay, well, why is it different than Java?
Yeah.
I mean, it's a language, basically.
Sure.
So, there's different ways of context of looking at it. But the point I guess I'm getting to is, aside from this evolution of what's driven these changes, is that there's a lot of this change going on. And, finally some of the people that had all the marbles started looking at other ideas. Some have come to some of the same kind of conclusions that I've just kind of outlined.
Sure.
And then others said, well, maybe we can do something different. But what it did is that whole open network effect. And there's been lots of discussions, lots of podcasts, a lot of papers written about open versus closed.
Sure.
So really, this is the one word that comes to mind. And this was a big word in our Faster Payment Task Force.
Okay.
That was actually absolutely required as part of the new system. And in that word is interoperability.
Okay. Interesting.
And what that basically, in short, means is that whatever system is there should be able to interconnect and be kind of format agnostic.
Sure.
Message spec agnostic, right? So, that could be a lot of work for a lot of solution integrators.
Yep.
But it's also a way of thinking, a way of designing. So, our system is like that today.
Sure.
And so we can interconnect to any other network. We're in effect almost like a network of networks.
Got you. Yeah,
so
yeah, makes sense.
That means, right? So it's like, you think of it like a keychain, right? You have one big master keychain, and then you have a bunch of sub keychains that hang off of it that do different things. You got one key for the house, one for the office, whatever.
Yeah.
So we've kind of created, in effect, a mechanism that is that master keychain. And, if you want to put your keys on it, you do. If you don't, you don't.
Sure.
Go find your own,
Yeah.
right? And so, but it is around that idea of interoperability, right? And there's a few people, kind of talked in this. I mean, the blockchain guys have always talked about that, because that's really the concept behind it from
Sure.
the blockchain standpoint.
Sure.
And the Bitcoin was too, right? Blockchain has evolved into side chains, and there's other kind of closed network effects, but that's kind of the same thing, just a different language.
Sure. I think.
But
No,
go ahead.
I was just going to say, maybe let's step back for a second, because I get this asked in my friend group sometimes. So maybe let's explain to people what Bitcoin is and how you actually mine it, and then let's maybe cover what blockchain is and how it kind of works with what you guys are doing. Is that fair? And then we'll keep going.
Yeah, absolutely.
Okay.
So I will try to simplify it.
Sure.
And we don't need to go into hashing and
No,
stuff
totally.
like Actually, we used to put on for about 3 years. We used to put on training sessions every year in Chicago, once a year for Bitcoin and blockchain and all the detail and all the fascinating part of it. But in simple, so we got to start with blockchain in a way, even though that's not what you heard about first, but you heard about Bitcoin first.
Sure.
Because it was created, blockchain was created, and I'm gonna oversimplify it because it's really
I think
like
that's better.
It's like a P&L in the sky.
Okay.
So it has inputs and outputs, it's debits and credits, right?
Yeah.
And so it was created as a ledger system, as you'll hear it called as ledger system, right? Because that's really what it is. It's just, if you think about your checkbook or a ledger, you got a credit side, you got a debit side, right? Mm-hmm. So you input and output. So, behind the scenes, there's these long numbers, basically, or character sets that really are tokenizations, if you will.
Sure.
Of a message that says, here is this, and it has a value of, $10.
Sure.
And it's not even $10. It's 10 point.
Right.
And then however long the end of it. So you got to go back and think about, so currency is a country-specific thing.
Sure.
And it's sponsored by countries and each of those central banks, and it's about, how much gold they have in reserve and all these other things, right? But really what this concept was an exchange of value. So
sure.
If the concept is, why do I need a bank? Why do I need this? Why don't you put in this? This is the old bartering system. Back in the old Renaissance days, I give you a goat, you give me a cow.
Sure.
Right?
Yeah.
And that's, in effect, what it amounts to in a digital sense. Right?
Right.
I have this, I have a value of this, you want to pay it, you want to pay $10, I'm using it as a non-fiat wording. But, you're willing to pay 10 for it? Okay, here you go. Here's an exchange, and I will send it to you, right?
Sure.
And so it's that idea. And so all it is a ledger that technology-wise it goes in and it comes out. Now, the mining practice is a validation process that says this is a correct transaction. It's kind of like, I used to have an image in my head when I think of the big P&L. Well, there's an accountant with the little binder on his head, the little visor on his head, and a miner is going, yep, I've got that's right. But it's a little more complicated, obviously, than
sure.
that. But miners basically fight for who validates it first.
Okay.
And whoever validates it, ding, gets a coin. So it's almost like a video game, right?
Sure.
So whoever gets there first gets the prize for winning it, and it's a group consensus that does it. So in other words, everybody goes, yep, this guy's right. Think of almost an auction, right?
Yeah.
So that's how the system works. It's kind of an input of values, group consensus on validating that transaction, that everything is the way it's supposed to be, and then it goes out the other side. So, that's that kind of the mechanism. Now, Bitcoin is just a label for that kind of currency.
Sure.
That's it. So there are like excess of 5,000 different cryptocurrencies in the world, right?
Totally.
And you realize that basically a Disney dollar is a cryptocurrency, or was, until they canceled it last year.
Oh, interesting. I never thought of it like that. But yeah, well, and you and I could create our own cryptocurrency, like right now, if we wanted to.
Exactly. All we have to do is agree upon that if I hand you something, and you accept it, and for that value, and we want to call it the Kevin currency, that's what it is.
Sure.
So it's just an exchange of value. That's the whole point.
Sure.
So crypto just basically means it's a cryptogram, which is in encrypted, and a tokenization type of a process to do the exchange.
Sure.
So that's at the base of what it is. So Bitcoin was kind of launched in the market to be an exchange of value and services, and obviously some shady people was using it in the beginning because it was hidden and it was anonymous. So nobody knew who the sender was, nobody knew who the receiver was.
Sure.
Just had a number.
Yeah.
So like the stock example, you feed something, it'll grow.
Yeah.
And it got attention. People started looking at ways of commercializing it. And, then there was all this speculation. Is it a commodity? Is it an asset? What is it? Because, of course, the government wants to get paid for it. So they want to say, opine on, do we get taxation off of it?
Sure.
So, anything that's out of control or does not have controls, some government or someone, regulatory bodies, going to want to control it or at least get paid for it. And don't get me wrong, I'm not libertarian in any way,
Sure.
but, there is an element of that. Some of it is protection of consumer, but I would say it's kind of funny that the first thing came out was, pay your taxes on it, not protect the consumer. But, so that's really what it amounts to, right? And so there's been a lot of them out there. Ripple, they're actually a commercialized payment company that it still is just a cryptocurrency.
Okay.
And they actually, or I would say the first ICO, because they had the currency first before they were a commercialized company for purposes of money transmission. And they really kind of stopped talking about the currency, but it was in fact what funded them all this time, except for the initial funding.
Sure.
So that's, and it's just an evolution of thought, right? So raising funds for a startup company or for new types of ventures is challenging.
Sure.
And mainly because one person has all the cards in their hand and the other one is sitting there begging for it, right? So it's an interesting dance. It's the dance almost like a boyfriend and girlfriend dance kind of scenario when they first meet each other. And so
sure,
this allows for the public, when the whole idea of crowdfunding came along,
sure,
this was really nothing more than crowdfunding for that space, for crypto type of company.
So how does it kind of work for push payments then? Like, you guys obviously have these APIs that kind of manage all this stuff kind of in real time behind the scenes. But how do you kind of explain what you guys kind of do to somebody that's not really technical and doesn't really necessarily understand it? Because it gets so complicated so fast. Is that fair to say?
Yeah.
And especially when you're pushing
absolutely
between different currencies, kind of globally, whether it's a digital currency or like just between banks or, just physical money currency. Like, how do you kind of explain what you guys do kind of to people that maybe aren't necessarily really, really technical?
Well, when I started the company, the first and the most important thing that we were to do is take the extremely complex and make it simple.
Okay.
This industry is extremely complex and overly complex for a host of reasons.
Sure.
Some justified, some not. But and I will have to tell you, I'm the guy that kind of understands the weeds. So it was actually even difficult for me to simplify it in some of the most easy communicated ways, and I've struggled with that even myself.
Okay.
It's hard to wind it back sometimes,
sure.
Right? But the simple answer to that is this. So and it also depends on who you are.
Sure.
Because I will. So I was talking to a very large processor today, and we were talking about a particular solution, and so then they immediately went and says, well, how does that help these other guys that they know we do business with, right?
Okay.
And I said, well, that's not an answer. They don't care about that. That's just a feature functionality that makes more sense to you and works for you and what you're trying to accomplish. But these guys over here, they have different needs. It just so happens that we built a platform that's very nimble, and it allows for interoperability, so it has to support multiple customer types.
Right.
So, so basically, we're the type of entity that a bank we can connect right with a bank, we can connect right with a processor, and we can connect right to a fintech. Very few companies can actually use the same company to do three totally different market sets.
Sure.
Right, because it's not so much, it's part of what we do, but it's also how we do it. And so to answer your question, what we're doing is, while we're a rail to some extent, or we're a connection to other rails,
Sure.
what we end up doing is allowing for us and our solution to better products of others. So it provides differentiator to processors.
Sure.
It allows them to do things they can't do today.
Sure.
And it allows them to, within a very short period of time, get to market. So one of our, our things that I'm very proud of is the speed to market. So the things that we actually can bring to the table for a bank or for a processor, and what we end up doing is, it would take those companies 18 months to 2 years at least to get to market for any one of those things.
Sure.
And we can turn them on in about 2 weeks to 2 months, depending on what we're doing.
Wow. That's actually really quick.
Right. So, I mean, if you think about how integrations work today, that's what we ended up doing. We already built all those connections to all the networks. We've already built all the needs from the routing aspects and how to manage the billing and how to handle the settlement and do all those different nuances.
Sure.
Right. So all you need to do is plug in the API and go.
Right.
The only thing that you might need is if we needed to build something custom for you that doesn't exist, that was unique to you or unique to your market. Which still, the way we structured it, we can stand up APIs in days.
Right.
It just all depends on if the data's there. Right.
Sure. Well, the other nice thing.
Go
ahead.
Yeah, so I mean it's really about time to market. It's about liquidity, because we provide liquidity to the company.
Sure.
So we have a new product called Instant Merchant Settlement. It's not too new. We actually started last fall, but it will be out in the market, some very large processors here in a very short period of time. I can't name the names, but it will be very apparent soon. And so what it does is it allows all their customers, which are, small businesses, restaurants, bars, to immediately get their funds back on their credit card.
Oh, interesting.
So, so today when somebody processes, think about a restaurant.
Yep.
A successful restaurant that's going into a weekend, they can have, very easy $50,000, $100,000 worth of credit card receipts in one night. That's small.
Sure.
Some companies do $500,000 in one night if they're a big, like Joe's Stone Crab in Miami or something like that.
Sure.
But you think about, so they got $50,000 in receipts. The food's out in people's stomach and walking out the door.
Yep.
Right. So the product is gone. They collect the credit card receipts. You still got Saturday. You got Sunday. And if it's a long weekend, you got Monday.
Right.
Now, when do you think for Friday? When do they get paid for Friday's credit card receipts? When they cash out and the night's over with, when do they get Friday's money in the bank?
What's it? It's got to be like 7 to 14 days. That's my best guess.
Well, it's not that bad.
Okay.
But that would be horrible.
Okay.
But they don't actually get it for 3 or 4 days.
Okay, sure.
Right, and so there is a next day type of funding, but not over the weekend.
Right.
So on a Friday, ACH doesn't run on the weekend.
Right.
So on a Friday, they could have $50,000 there. Maybe another $100,000 on Saturday. Maybe $50,000 on Sunday. So before you know it, you've got an everyday restaurant floating $500,000 over a weekend.
Yeah.
And they still have to put food on the table for the next servings.
Sure.
Right? That's hard on small businesses.
Sure.
And that's a repeatable business that's constant. And they have to manage that cash flow very different.
Yeah, like
so
every weekend.
Yeah, exactly. So, they catch up during the week.
Yeah.
They go, and what do? They got to go buy a bunch of food, make everything again, and it's a cycle.
Yeah.
So we allow them to get paid 24/7, 365 days a year, instantly, once they batch out. And if they're online, they just basically set the amount that they want to cash out at, $5,000, $10,000, and then send them the cash. Put it in their bank instantly.
So how do you, without getting too technical, how do you guys go about doing that?
Well, we've basically got a mechanism that allows us to send funds from one bank account to the next.
Oh,
right.
Like securely, and like you verified those transactions, and that's why the banks let you release those funds outside of kind of banking hours. Is that a simple way to put it?
Yes. I mean, there is definitely risk management involved. So we mitigate risk and we monitor risk and things of that nature, because there are things that can go bump in the night. But generally speaking, yes. So we've put together a process and automated this process to allow for this to happen. And it is for an online, transaction, it's an easy implementation.
Okay.
So right now we've got ISOs or lining at the door waiting to use this for whoever processors we want to bring to the market first. So I will have to say that the two particular processors that are going to be in the market first, they're going to have a heyday.
Sure.
So they're going to eat everybody's lunch.
Sure.
So you got to realize that the acquiring processors today, their biggest competitions are the major banks.
Right.
So you got Bank of America Merchant Services, Wells Fargo, because they can do next day because they're the bank.
Right.
But a processor is one step down, so they have to wait that extra day.
Right.
So it's hard for them to compete, and the bigger banks are going to hurt that.
Right.
So this is a great leveling of the playing field for those guys.
Sure.
Right. And so, that marketplace is now become so commoditized where they fight over pennies on the transaction level.
Sure. So then how do you guys monetize that? Do you just take like a certain percentage of the transaction?
We charge a flat fee.
Okay.
Right. To send the funds. Right.
Got you.
We're not, even though we have components of interchange and things like that we stomach it, we take that risk, and basically we charge a flat fee. We execute the transaction for them. They can choose whether or not they want to pass the fee on or not. That's up to them.
What do you mean by pass the fee on? Oh, to like their consumer?
To the merchant, I guess.
Oh,
right?
okay,
so,
I see.
Right. So some will elect to pay for it. Some will elect to say if here's an option. If you want your money right away, here's the fee.
Gotcha.
So the credit card works. The whole credit card world works that way. In other words, here I'm going to charge you to do my part, and everybody else's fees it takes to do the job, I'm going to pass it through to you.
I see. Yeah.
So what they do is they negotiate on this, 5 cents, 10 cents, this transaction rate. But the merchants don't realize that when they get the bills in a month, there's this big, huge automation of this itemization of all these transactions and the cost. Nobody, not should say nobody, but many can't understand or even go back to validate what it is.
Right.
But that's all those pass-through fees. So they think they negotiate the best they can, and they got a $500-$600 bill at the end of the month or whatever that is, and it's 5 or 6 pages of it. And then what does it happen? It goes in the trash can or it goes in the file cabinet and moves on.
Right.
But they don't realize that what they're really paying is much more than this little 5-10 cent transaction that they negotiated.
Right. Interesting. Is that why, and this is maybe unrelated, but is that why some of the higher end kind of like points cards or whatever, I've heard that merchants don't like sometimes when you use some of those like higher end cards because it actually costs them more money per transaction. That's true?
That is correct. Yeah, that's absolutely correct. Absolutely. So there's processes, and I actually know a company today that helps companies strip that out.
Okay.
Right? But it's normally done. Amazon does it.
Okay.
So if you use a points card on Amazon,
yep,
you won't get your points because they're going to route it away and it's similar to how we route our transactions actually. But they route it in a certain way that basically strips out all that extra interchange so they don't, and nobody gets the point. So that's where that point and that benefit comes from, is the merchant pays for it.
Oh, wait, okay. So I fully understand this because this is actually quite fascinating to me. So there's times that I use my points card that I might not actually get the points at certain merchandise or retailers because they route their payments a different way, so like they don't pay a higher fee. Is that what you?
It's very possible.
Wow, I had no idea.
It's normally online merchants. You'll find that out more than anybody else. I mean, brick and mortar won't do that. They don't.
Sure.
Sometimes they might, because there are solutions that do that. There's a few of them.
Okay.
I know most of them that offer those services, and And it's really what it amounts to is they're just paying more interchange because it's a point card. Remember something, all those kickbacks, all those things that comes from somewhere.
Sure.
And all the interchange that's collected today is no longer used for risk mitigation like it used to be. It's used for kickbacks and points, and that's the way the system works.
Interesting. So how do you get around that then? Because like again, not getting too technical, like I'm actually quite fascinated by this.
Actually, I use a regulatory ruling that helps me do it.
Okay.
And it's all under Dodd-Frank.
Oh, wow.
So I'm able to do what I'm doing simply because of the Dodd-Frank ruling.
Okay. And then you route it away where I just don't get the points for that online transaction if I buy something from Amazon or one of the retailers.
But remember something. What we're doing is we're not using it as a credit transaction, like a credit card, like you're doing. We're sending money. So
okay.
if you're getting a
Sure.
transaction from us, you're getting money, which you're fine with that.
Yeah. Okay.
So,
I see.
right. So there's nobody paying the interchange in this case except for us.
Got you. Interesting. Okay. That's wild. I never knew that was like how that worked out. Okay, cool.
Yeah.
So this kind of leads me, I guess, into kind of the next thing I kind of want to talk about. I think like since you were on the show a while ago, I think a lot has kind of changed, and I think we've kind of covered some of that stuff with like blockchain and Bitcoin. At least the kind of cryptocurrency and at least kind of blockchain stuff is kind of at least become in the media, like when people that are non-technical, or like when my mother starts asking about what Bitcoin is or something like that, I was like, oh, it's hit the mainstream now, right? So what else has kind of changed in the kind of online payment space, within even the last year that you've noticed?
Wow. It's a little bit more of the same, but
Okay.
what I would say is in the last year, it's you remember something that no matter what idea, newfangled thing that hits the market, everything is about adoption.
Sure.
Everything.
Yeah.
Because if people don't use it, well, it's not going to last, right? So that's really what it always boils down to. So, AI and machine learning and all those things, came on pretty strong, and a lot of, I'll say, trinkets were created, like Echoes and
Sure.
Alexas and stuff like that, which are more toys than anything else. But what it does is it just allows people to take those, kind of ideas or toys or whatever, but those mechanisms, and then put them together. So what happens in innovation in general is, let me take a little bit of this idea and let me take a little bit of this.
Okay.
So think about what we do. We provide I call it a utility service offering, right?
Okay.
So look at Plaid. Plaid is the same thing. Plaid offers a utility service offering that you can go to them and basically, check your bank balance with credentials, right?
Okay.
And do some other things. So there, you could take those and put it together and create your own idea. So the digital wallets, there's companies that do that. There's prepaids that companies do that. So what happens is, as these become more predominant in the major market, then people take this one and put it together with this one and put it together with this one and create something new.
Right.
Right. So, the voice first move is really starting to catch. And I just saw it on a headline the other day, and this is the Alexa aspect of it.
Yeah.
So it goes back to that adoption, right? So remember what we talked about in the beginning is about speed, efficiency,
Sure.
less friction, ease of use, right?
Yeah.
And every generation comes along, we can say they're entitled, but I wouldn't call it entitled. They're just, maybe it's spoiled but it's not in the sense of, in a bad connotation, not like that, but rather, you didn't know any better. You grew up that way.
Sure.
Like my kids today, at 5 years old, I had them reformatting a DOS prompt and reprogramming computers because I wanted them to know it.
Sure. Makes sense.
And once they got out of kindergarten and hacking the computer, then I got them onto something else. But but they they're gamers and they understand things. They just get things differently,
Sure.
right? And this is a generation growth, right? And so what happens is, as we evolve as a society, each invention from the last generation becomes the bedrock of the next innovation thought process.
Sure.
Does that make sense?
Yeah, totally.
So really what I think you're going to see now is the idea was put in everybody's head, oh, well, let me just speak it. Now if you think about, I forget how long ago, it's probably been 30 years now, but how? Space Odyssey,
Yep.
the first really big movie like that,
Yep.
and he spoke to the computer, right? Well, we're just now kind of getting to that point, aren't we?
Yep, totally.
So if you take Alexa and you take these things and actually put some serious meat behind them, why not? Why shouldn't I just, speak and go, hey, can transfer the money from here to there, or hey, can you call the pizza shop and have my favorite order?
Sure.
Right? Why shouldn't we just be able to do that? Because what does it do? It gets us, again, more quality of life. It's all about, hey, if I can speak it, not have to type it, not have to open the computer, not have to go to my phone.
Yeah.
Our users of our phone cause their own problem. Right now I've got this huge sore in my thumb because I use my phone all the time.
Sure.
Because I'm swiping, right? I'm swiping, I'm moving, I'm typing.
Yep.
And so, those are, every new invention has, some form of impact. And so what we always look to do is get more efficient, more, less friction. So we're constantly evolving our space and our thought process of how to do things. So, that voice first aspect of it is the next big wave.
Sure.
And so, that's it's yet to hit the market in a strong sense, but it's just about connecting that need and that demand to the capabilities that are out there today, assemble the right units, and you've got another delivery mechanism that suits, right?
Yeah, no, that's an interesting way to put it, because I got a Google Home late last year, the Mini, because it was like half price, and I kind of thought, well, I don't know how much I'm actually going to use this, but for $40, I'm in tech, I should probably, suck it up and buy one already, and you know what? I actually, my wife uses it a ton. My daughter uses it a ton. I actually use it a ton. It is complete and utter, a toy. I will 100% openly admit I could do basically all the things that it does, either on my phone or some other device. But the convenience of it is pretty nice in certain situations, but it is very much a toy. But it's funny though, is now that my daughter will talk at it and, get it to play the latest, a song from Frozen or, some other song from Disney or something. It's interesting because she doesn't understand certain things, like you can't fast forward through commercials on live TV where you can on other PVR content, right? So it's interesting. You could say, well, she's 3, she doesn't understand, or you could turn that around to say that's entitlement or something, right? But it's to your point a second ago, it's that generation just expects that, right? It's what do you mean I can't fast forward through the commercials, or why is there commercials at all, right? Or growing up,
there's a brokerage commercial on television, right?
Mm-hmm.
That actually runs along this vein. I don't remember which one it's for. But, the guy's talking about an investor or something and losing money or something. And his kid, little 5-7-year-old kid sitting next to him, he goes, I don't get my money back if I lose, or it doesn't work that way. And he just goes, well, why not? Right? And so it's that curiosity is part of it, which makes it cute. But, that's what makes us innovators constantly ask that question.
Sure.
Why not?
Sure.
Right? And so that's what really is about innovation. And so if we can, there's a lot of futurists that talk about, what can be and what will be. Well, because really it's just about creating that idea of why not.
Sure.
And if you put enough capital and enough smart people together, they'll figure out how they can do that.
Sure.
And we can create a better experience. I go back to it to time. Because I've always said what we do is actually give you time. We let you buy time.
Sure.
Because in essence, what used to take 3 days, you can do in a second now.
Sure.
So you've just bought, 70 hours or so, right?
Yep.
So it's and really nowadays more than ever, also because of technology, we need time.
Sure.
More and more, we have less time to spend on the quality things that we should be spending on in our life.
Yep.
Right. And so while we have all this automation, the fact that I gotta, it's crazy even to this extent. I have multi-factor here. I jump over this.
Yeah.
I do this. I do this. Sometimes I gotta, just because of security and the way it's coupled together today.
Yeah.
It actually is more complicated than if we had just done it manually almost, but not quite.
No,
but,
I know what you mean. Yep.
Right. So the point is as we grow and as we evolve into new technology, new capabilities, it creates this new layer of complexities and problems to solve for every generation.
Yeah, that's fair.
And so, and the next wave of whatever the next thing is, right? So the Alipay kind of dominated, the Asian culture and that whole era because they were able to jump generations that didn't exist there because they didn't have a maturity.
Sure.
Our market's a little different, more complex, more mature. So, there is people that want to hold on to their marbles a little bit more.
Sure.
That's part of it. But the other thing is it's just not as easy and it's a little bit more complex.
Sure.
But, so maybe the right way to manage that is us leaping over and not going to the Alipay model, but going to the one after that.
Right.
Right. So part of it is all about identifying the waves. And in the end, I hate to put it this way, part of it is usability and adoption, because if you don't have adoption,
sure,
you don't have anything.
Yeah.
But you need adoption, because if you have adoption, then you have a business model.
Yeah, that's fair.
Because then you can figure out the monetization of that. Because if you can't make money, then nobody's gonna, grow a company if you can't do that.
Sure. And does the stuff happening in Europe right now kind of affect you guys quite a bit, or not really?
Which part? You talking about the open APIs and that type of thing?
Yeah, and all the privacy
PDF
stuff that they're working on too. Does that affect you guys?
Oh, it affects everybody.
Sure. Okay.
If I would have to say, this happens to be, I'm not sure the date and everything, but I just got in the last 2 days more updates in my privacy notice to every single online account I've had than anything I've ever seen.
Sure.
I probably got 20 or 30 of them in the last 24 hours.
Okay.
So, everybody's preparing for it, but it affects everyone now.
Yeah.
So, we're not really geographically bound as much as we think we are. While
Fair.
I'm not sitting with you right now, I'm talking to you. And so just because you're in Europe, so there's a body of water we call the big pond, but does it really matter?
No.
Other than time zones and stuff?
Sure.
So yeah, I think it affects us in many ways. I think it makes us look more globally and consider global impacts.
Sure.
I do think that the evolution of PDF2 and open API kind of idea
Yeah.
is really what's influenced us a lot.
Sure.
A lot of processors are coming out with open APIs, so that creates an ecosystem effect. Because the more people, that goes back to what we were talking about interoperability.
Sure.
The more you allow people to connect to you by nature and by natural effect, you're going to get more transactions, you're going to get more business. It's just going to happen. You're not giving stuff away. You're actually opening it up for business.
Sure.
It's like the old guy that had the general store says, "Oh, I only buy my tomatoes from John, and I'm only going to sell them to Billy Bob over there."
Sure.
Really? No, you're going to put them out and you're going to say everybody come buy it.
Yeah.
Right. And so that's a mentality change. And, I've been a firm believer that change is opportunity all my life.
Interesting.
If you believe that otherwise, then you will be stagnant in everything you do. Most people are afraid of change by nature. By humans, we are, because it's the unknown.
Sure.
But, I think that opening up and changing basic principles that we've always known to be true isn't always true, and most of the time those are made up and on false assumptions. You can easily take a look. Here's a easy example.
Okay.
So the data collection things done today, when you do validations and verifications today of KYC or validating people's identities, has anybody, if you've ever went back in your your family tree or family heritage, right?
Yeah.
The farther you get back, a lot harder it is to actually know data.
Sure.
Now, why is that? Because people were writing it.
Yeah.
You couldn't even read people's spelling.
Yeah, fair.
Right? So there's no exact. And as we got into the digital age, we got more and more data, but it wasn't organized. So it's all over the place.
Sure.
And it's incorrect and not validated. So, some of the best validation sources that are used by banks today are the mess. There's no validation there. There's a percentage of maybe it's right, maybe it's not. Right?
Sure.
But that's all they had at the time.
Sure.
Right? So that's why change is good in that sense, because what you knew to be true before is no longer true today.
Sure.
And that's a kind of a basic principle that the more people can accept that, the faster we can grow as a economy and a race, and really, be more supportive of even each other, even from a position of people's position and thoughts of how they see things, right? Things change. It never stays the same.
No, I 100% agree with you, but we're out of time. So let's close with mentioning where people can get more information about you guys and any other links you want to mention.
Yeah, well, absolutely. You can get a hold of us at www.pushpayments.com. And we're at most of the conferences, but feel free to reach out to us at any point and send us a request. Shoot us an email, and we'll be glad to get in some good discussion.
Perfect, Travis. Well, I really appreciate you taking the time again to be on the show, and I look forward to keeping in touch with you, and have a good rest of your day.
All right. Wonderful. Thank you, Kevin.
Thanks very much. Okay, bye.
Thanks for listening. To join the free community, buy some merch, sponsor the show, or sign up for the newsletter, please visit the website at buildingthefutureshow.com. The music for the show is done by Electric Mantra. You can check him out at electricmantra.com and keep building the future.